Hello. Once again, we have another video of both Scott and myself, Scott Kramer from Caldwell Banker Realty, and myself, Tom Drasler from Arbor Financial Group. What I wanted to ask you today, Scott, is what's the beat of the market?
Actually, the activity has picked up a lot since March. Now we're into April of 2023, but the activity's picked up a lot in March. The buyers are out in the marketplace. We get a lot of showings at open houses, or just agents wanting to show their customer the property. As long as they're priced well and they're in great condition, we're still receiving multiple offers. It might be 2 or 3 offers on a property versus we got 10 to 20 in Q3 or Q4 of 2022.
Well, and I'm sure also if the price point matters too. If you're in that channel of maybe 750 to $1 million, the activity and interest level is probably going to be higher than above $1 million.
It is, but it depends. Things below $1 million, they're moving a lot faster, but there's limited choices. I mean, our inventory in Orange County has been running at about 2,100 units available for sale month over month. That's all price points in Orange County. The single family homes are right around 1,300 units, all price points. And then the remainder of that are condo townhomes. So the challenge with the buyers are they're looking for more good inventory, and it's just anemic at this point.
So you haven't seen much improvement as we enter into the home buying season?
No, I mean, a lot of it has to do with the potential sellers where they refinanced their property back in 2022 to 2.5%, 2.75% interest, or even 3% interest. They may not like the house, but they definitely like the rate because they've saved themselves $1,000, $2,000 a month by refinancing. So the high rates at 6.25%, 6.5% are still putting a squeeze on the market.
How about, obviously I'm in the business of mortgages and rates have gone up. That's had an impact, but has it had also an impact, and are you seeing more cash buyers out there?
There are a few cash buyers, but not like there was before. When the cycle of the properties were increasing in price, people were trying to buy it at that bottom cycle. As they continue to go up, fewer and fewer cash buyers that are out there. But what I explained to sellers too on how much the rates really affect the purchasing power of the buyer. So we'll use a scenario of, say, $1 million property, and whatever the rate is, whether it's 3%, 4%, 5%, when that rate increases 1%, it decreases the purchasing power of the buyer by 10 to 11%.
That's correct.
So if you take a scenario of $1 million house, and at one point you had a number of, say, 10 people that could afford that $1 million house, when that rate goes up, say that 1%, then it decreases the buyer pool by 10%, meaning now you may only have 9 buyers, 8 buyers, 7 buyers. And as that rate continues to go up, you go from 10 down to 7, down to 5, down to 3. So it takes a little bit longer to sell that property.
So you've been doing this for how long?
20 years.
Oh my God. I did 16. I thought that was a lot. So you've seen enough. So if we're going to close on this session, but if you need experienced borrower and real estate agent, I'm sure we can cover and provide you the service that you deserve. Thank you, and we look forward to presenting again to you folks.
Thanks again.